Let's talk about the big one, home ownership. It's supposed to be the ultimate life goal, right? But we've got to ask, is that dream home actually a smart investment? Or is it kind of a financial trap, one that's designed to keep you broke?
The source material we're digging into today puts it pretty bluntly. It calls modern home ownership a financial stress simulator that we've all just agreed to rebrand as adulting. I mean, that's a bold take. So let's unpack the numbers and see if it holds up.
Oh, you know this scene. It's late, you can't sleep, you're scrolling through real estate apps, and every single starter home that doesn't look like it's about to collapse costs like $500,000. The math is just brutal, and you start to wonder, what am I doing wrong? Here's a spoiler. It's not you, it's the math.
And that really gets to the heart of what we're talking about today. See, there's a huge difference between what a bank tells you can borrow and what you can actually afford without completely wrecking your financial future and your peace of mind. So yeah, let's get into it.
Okay, first things first. We have to tackle the biggest myth in real estate, this idea that if the bank approves you, you're good to go.
Everyone says it, right? Your broker, your parents, those influencers on social media, they all push this idea. But listen, just because you qualify for a loan, that and being able to actually sleep at night once you have it, those are two very, very different things. Now, check this out. For a pretty typical $500,000 home, the old rule of thumb says you need a 20% down payment. That's $100,000 in cash. But the median savings for an American household is around $8,000. That's not a gap, my friends. That is a $92,000 canyon. So what happens when you can't cross that canyon? Well, you put less money down, and then you get slapped with something called private mortgage insurance, or PMI. Our source calls it the poverty tax, and that's because it's literally a fee you pay every month to protect the bank, not you, all because you couldn't show up with a giant pile of cash. And that little tax, it usually costs you somewhere between $200 and $400 every single month. It's basically a penalty for not already being rich. But that down payment stuff, that's just where the bleeding starts. Now let's get into the real budget killers, the hidden costs, the little leaks that can turn a mortgage into a money pit. All right, so you get a loan for $450,000 on that $500,000 house. With today's interest rates, your basic payment, just principal and interest, is going to be around $2,800 a month. And that's the number everyone gets stuck on. But that's just the price of admission. Now we got to add the leaks. First up, property taxes. Let's be conservative and say that's another $500 a month. Then you've got homeowners insurance, so add another $300. And then here's the one nobody ever wants to talk about, the 1% rule. You have to plan on spending 1% of your home's value on maintenance every year. For a $500K house, that's another $417 a month that just evaporates. For a new water heater, a leaky roof, you name it. And just like that, your $2,800 mortgage is actually a $4,400 a month reality. It's shocking, right? This is how the true cost hides in plain sight. So what does it take to actually handle that payment without being completely stressed out? Well, to comfortably afford a $4,400 monthly nut, your household needs to be pulling in about $187,000 a year. So who does that actually apply to? How many of us are in that club? Well, as you can see here, only about 15% of households in the entire country make that kind of money, which means a staggering 85% of us cannot comfortably afford a typical $500,000 home. That's not an opinion, that's just the math. Okay, so this brings us to the next big argument people make when they stretch themselves this thin. You know the one, this idea that renting is just setting your money on fire. Let's take a closer look at that, shall we? We've all heard it a million times. Maybe we've even said it ourselves. I'm just paying my landlord's mortgage. I'm throwing money away. But is buying really always the smarter move? This all comes down to a concept called opportunity cost. That $100,000 down payment, it doesn't just disappear. If you put it in a house, it builds what's called illiquid equity, which is a fancy way of saying your money is trapped in the walls. You can't easily spend it. But what if you put that same $100,000 into something like a simple S&P 500 index fund? Basically, a basket of the 500 biggest US companies. Well, that money would be liquid, it would be compounding, and it would be growing with the market. And over 30 years, man, the difference can be just massive. Look at this chart.
The growth you could get from an index fund, even with a pretty average return, can totally blow away the equity you'd build in a home, especially after you factor in all those hidden costs we just talked about.
And that kind of forces us to ask a new question. What is wealth really? Is it having your net worth trapped in a house you live in? Or is it freedom, the flexibility that comes from having money that's actually working for you? So where does that leave us? What does all this mean for you? Well, it means you've got a choice between chasing a status symbol and building real, actual security for yourself. So here it is. This is permission. You have permission to opt out. You have permission to look at this whole system and recognize that maybe the game is a little rigged, and you have permission to choose not to play. You are not failing at being an adult if you decide not to financially drown yourself for some granite countertops. Because think about it, 10, 20 years from now, your future self is not going to care one bit about that trendy kitchen you posted on Instagram. Your future self is going to care about financial security, about peace of mind, about being able to handle whatever curveballs life decides to throw. And really, that's the only question that matters. Is that dream home actually worth your financial freedom? The answer is going to be different for everybody, but at least now you have the real numbers to make that choice for yourself.